Yeah. Hey, Morgan, how are you? So this is potentially huge, right? So this is like great news to kind of like wake up to. And so really this was like the wild card, right? So the Delta variant and what that was going to mean. Were we going to have to kind of have another repeat of last year? Do we know what to do? We certainly have some information and kind of like this trial run from last year. But now with this news, I think it's really reducing stress on the overall economy, right? So not necessarily for healthcare workers, but clearly in like the service industry, restaurants, travel, airlines, entertainment, all of these industries that have been really hit hard by COVID. And I really think that this is a game changer. As you mentioned, not so much for Regeneron and Moderna, but certainly broad positive implications for the overall market and economy.
Brian, how do you see it, especially given the fact that we have seen this rotation as we've had rates move higher over the past week and a half in a market way? We have seen this rotation into more value and cyclical-oriented names, reflation stocks, if you will, and healthcare has been, alongside tech, one of those losers in the process.
Yeah, good morning. Thanks for having me. I think this is pretty consistent with what you've seen all along. Whenever there's any good news related to COVID-19, cyclicals tend to get a bit of a boost. It's been consistent with the decline in Delta cases worldwide and in the United States. I think that's part of what's been driving rates up and what's been driving investors more into that cyclical and value trade. This doesn't feel like as immediate in terms of the impact that it will have on the economy. I think what you are seeing, though, is a slowdown, not due to Delta and COVID-19 necessarily, but due to just the removal of fiscal stimulus, monetary stimulus that might be appropriate, given that we're moving out of the pandemic, out of the emergency mode of the pandemic. And I think that's what's, going to be the major narrative for markets in the fourth quarter and as we move into 2022. So I don't think the cyclical trade is going to last in a durable way. I think it will have its day when there's moments of bursts of better than expected economic data. But I think for the most part, as we slide back down into some sort of normal looking economic environment by the second half of next year, I think growth's going to get more of a look.
Interesting. All right, Tiffany, what is your outlook for the fourth quarter of this year? I mean, certainly the markets are climbing a wall of worry right now, and Q3 earnings, as we get ready to go into that season, could be a little nasty, potentially, given some of the supply chain issues we've been hearing companies begin to warn even more so about, and some of the cuts to forecasts.
Absolutely. I mean, supply chain issues are the key issue, right, that everybody's talking about. And so I really do think that going forward into Q3 and actually even into Q4, profit growth of corporations are going to definitely slow, right? So costs are increasing, labor, freight, materials, all of those things. I know of a company in Asia who manufactures stuffed animals. And it cost them $5,000 to ship a container to the U.S. Now it costs them $24,000 to ship that same container. So the costs are extremely real, and they're really, really out of control. So I do see margins shrinking. I do think that overall, we're still going to see positive results from earnings, from stocks, but it's definitely going to get a little bit tight, and we're not going to see what we saw last quarter.